Hi guys, welcome to SavvyMoneyShow with me, host Sean. Well, I have been asked about car dealerships stocks, and I thought I would indulge. I gave my list and reasons why in the Discord, and which is free, completely free, no charge for any aspect of it. And now I'm going to do a video on it. Tesla, we all know, is the most valuable auto company in the world with a market cap of more than 600 billion, but Toyota is the world's biggest auto company by revenue. Generated 280 billion in revenue in 2019 compared to 24.6 billion for Tesla. Toyota shares are about flat in 2020. Merrill Lynch, Japan securities company analyst Kei Nihon Yanagi, probably butchered that, says the company's business has been solid. There is a growing sense of urgency within Toyota to focus more on its battery EV technology. Bank of America has a buy rating and $180 price target for TM stock. It has a market cap of 223 billion versus enterprise value of 19 trillion. Price to sales and price to book of 0.01. Total cash per share of 53.57 and 2.65% dividend to be paid in September. They are involved in the ICE vehicles, hybrid, EV and hydrogen trucks, as well as invested in the world's #1 quantum computer. Now we can see they may not be the most exciting for the share price accumulation, but with a PE of only 11 and the fact that once it rolls out its hydrogen truck and its EV business takes off, I think this is a good one. It has a moat and it has a lot of cash on hand, but still, remember to always do your own due diligence, not listen to an idiot like me, and that way you will go far. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button, a lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, dollars, depending on the platform you use if you deposit a small amount. Now, shares of GM have outperformed the S&P 500 in 2020, gaining about 17%. Wall Street analyst John Murphy says investors don't fully appreciate General Motors' profitability, including $4 billion in net income in the third quarter. That profitability stands out even more compared with other EV technology leaders who are struggling to consistently generate positive net income. In November, GM announced plans to invest up to $27 billion in electric and autonomous vehicles by 2025, including the launch of 30 new EV models. Bank of America has a buy rating and $72 price target for GM stock, one of the biggest foliate automakers to make the switch to EV quicker than any other. Price to sales of 0.67, price to book of 1.64. Market cap versus enterprise value of 82 billion versus 175 billion. And if you remember last year, they offered the dealers a lot of money to go EV. They either turn to EV or they take money to no longer be GM dealers. Chinese EV leader NIO has been one of the top performers in the entire stock market in recent months. Incredibly, NIO's stock is up nearly 2,000% in the past year. Murphy says there's even more upside ahead for the high growth stock. NIO recently reported a nearly 110% year-over-year increase in vehicle deliveries in the month of November. Securities analyst Ming-Hung Lee says NIO's fundamentals are on a positive track and is projecting NIO's revenues will more than double to more than $32 billion in 2021. Bank of America has a buy rating of 54.70 price target for NIO stock. In my opinion, people overreacted to last earnings without realising all of China shuts down for a short period, but then ran into the chip shortage. So it looked like a long-running problem. I was in NIO from $3 because they had a unique battery swap tech, a smart club, and cared about the consumer. Shall we take a quick look at NIO? Now, you can see that their financial issues had before no longer there. Their total liabilities are covered by the current assets, and we can see that although the market cap is double enterprise value, the price to book is still under 2. And if it drops much more, I will be buying more. The next one is luxury car maker Ferrari. It spun off from former parent company Fiat Chrysler Automobiles in 2016. Ferrari has been leaving S&P 500 in its dust, gaining about 29% year to date. Murphy says Ferrari's product mix, pricing power and strategic execution outshine many of its auto peers. Ferrari's average selling price for its vehicles was around $324,000 in 2019, and that type of pricing power boosts the company's margins and helped generate $200 million in net profit for the third quarter. Bank of America has a buy rating and $270 price target for a race stock. Tiny dividend, and to tell the truth, they are a status symbol, with rich getting richer during the Rona. These won't go away. Worse fundamentals compared to the ones above, but luxury niche market. Anyway, Nihon Yanagi says Honda is well positioned to outperform in a difficult environment given its robust balance sheet and attractive valuation. Honda's share trade at just 10 times forward earnings and 0.42 times sales, and he says they offer considerable investment value. The company has a dominant competitive position in the motorcycle business, which is a long-term growth opportunity. In its most recent earnings call, Honda said its priorities are overhauling costs, increasing its EV sales mix, and raising its 2.45% dividend. Bank of America has a buy rating and $37 price target. Market cap is $52 billion versus $5 trillion enterprise value. Has a price to book of 0.01. Cash per share of $17.68. Now, because I keep getting asked about XPeng, it's a leading Chinese EV maker that was listed on the New York Stock Exchange starting in August. Lee says XPeng has impressive operating efficiency and is developing its own in-house autonomous driving technology. XPeng plans to launch XPilot 3 in early 2021, which will feature navigation-guided pilot on highways and memory auto parking. Lee says the company's focus on connectivity is a sound strategy and is anticipating high attach rate for X-Pilot 3 upon launch. Bank of America has a buy rating and a $43 price target for XPEV. Ford Motors is the largest legacy US automaker, generating about $156 billion in revenue in 2019. Ford reported about $2.4 billion in net income third quarter. Murphy says the strong numbers may be a sign of better days ahead in 2021. After the company struggled to get consistent results in recent years, Murphy says Ford may be in the early stages of an upswing in earnings growth, thanks to its global redesign initiative and its upcoming lineup of model launches. Bank of America has a buy rating and $10.50 price target for Ford stock. It has a market cap of $53 billion versus an enterprise value of $172 billion. Price to sales of 0.41, price to book of 1.57. Tesla, pioneering maker of premium electric vehicles, has grown to become the world's largest automaker by market cap. Strong US sales and a growing international presence, investors clearly expect great things from Elon Musk and his team. I'm waiting for a $400-500 range before adding. I think long term they can be great. Short term, it's already got too much factored in. FACU is best known for its Jeep SUV and Ram pickup brands, as well as its Dodge muscle cars. Also owns a Fiat, Alfa Romeo, and Maserati brands, and has big operations in Europe and South America as well as the US. Volkswagen is one of the best-selling automakers outside the US. Its portfolio brands include Volkswagen as well as the Audi, Porsche, and Bentley luxury brands. Not a car brand, but a skateboard for EV cars. See great growth pushed down by SPAC war. Links to Apple Car, which I've done videos on before, and has more pre-orders than market cap. Now, Lordstown was knocked down by Ford's F-150 EV alternative. A report saying they're similar, so people are more likely to choose Ford, which will mean an analyst has recently given Ride a price target of $1, which will hurt workhorse because they have investments in Lordstown. Because workhorse otherwise may have been in here because they have an order book where more than 3/4 of their market cap. They've already got orders from an arrival. They look good as well because it's a micro factory. You don't need employees to put it all together. You've got massive pre-orders from likes of UPS, but again, when you look at the value of the company. Anyway, I hope to see you in the next video. Hope you've hit the subscribe button, like and comment. I'll see you later.